this problem, right? It's that the fiat system requires perpetual credit expansion to persist and exist. That's a fact. It's a fact of this debt-based monetary system. There needs to be perpetual credit expansion or the house of cards collapses. And there's nothing backing the debt itself except debt. There is no gold at the base layer, it's only debt. The other part of my thesis is that now we have an engineering solution. The engineering solution is a neutral, apolitical monetary protocol that's open and anybody can use it.
Thrilled to continue the conversation now with our next guest. He is the head of market research for Bitcoin Magazine Pro. Please welcome Dylan LeClair. Dylan, good to have you on. And just for the folks interested in Dylan, you can go to bitcoinmagazinepro.com to learn more. But Dylan, welcome to the show.
Thanks. I'm excited to be here. It's going to be a good chat.
I think so. I mean, you're one of the more Bitcoin influencers, most popular Bitcoin influencers out there. So excited to get your thoughts. I know that you've been making the round saying that if this is not just an FTX fiasco or a Bitcoin downfall, but it's a bursting of the everything bubble. Tell us your thoughts here.
Yeah, I guess so. Just to simplify my personal Bitcoin thesis, why I kind of champion Bitcoin itself and like to separate it from crypto is I believe that there is a 100, 200, 300 trillion dollar problem in the world, potentially the biggest problem in the world. And it's that the cost of capital is fundamentally broken, right? The price of money is centrally planned. We're 50 years into this global fiat currency experiment, and we're reaching a point where debt burdens across the world are so bloated that the only way out is monetary debasement, is financial repression across the board. Inflation higher than interest rates. So the everything bubble in terms of whether it's stock market valuations, housing market, zero interest rate policy, negative yielding bonds and nominal. Just 2 years ago, there was $20 trillion of global wealth of bonds where you would pay $100 and to receive 99 back in say 10 years or 20 years. So what is this? This is a global everything bubble and it's unwinding. We're seeing fixed income drawdown across the board. Well, really everything, right? And so with that, obviously Bitcoin and broadly crypto, which I personally think is mostly just warrantless speculation, unregistered securities, and a lot of fraud, just being transparent. Obviously that's been hit, right? So we see these bucket shops collapsing, these yield services collapsing, and really everyone that was swimming naked is going under. And what's Bitcoin doing? It's producing a block every 10 minutes. Nothing has fundamentally changed, and hash rate's at all-time highs. So the story is unchanged. Bitcoin's exchange rate's down, but that's nothing but a thing. So my personal Bitcoin thesis is unchanged. It's as strong as ever. And I think really the macro people don't understand what this is, and the crypto people also missed the boat. And so I think there's, Bitcoin has probably the best asymmetric bet over the next decade, and really no one understands it.
I posed this question to Mike McGlone too, and I'm really curious to get your thoughts because obviously I feel it like your core belief has not been shattered yet. A lot of other investors I'm speaking to are thinking, well, now I don't know, is Bitcoin the fastest horse in the race? Why should we believe that this technology is going to stick around? Why can't there be something better that emerges than Bitcoin?
Yeah, so what you have to ask, and really when people say Bitcoin is the first iteration, how do you know it's not going to be replaced? Well, it's not. Bitcoin is not the first iteration of digital cash. It's the first iteration that worked, right? What Satoshi did is he basically created an engineering solution in an open source manner, airdropped it and left and never took any coins for himself. And really, there's no one that can fundamentally change the protocol, right? So you can spin off a new iteration of Bitcoin, right? If you think of Dogecoin or Litecoin, right? These are just Bitcoin forks. And really, when you look at digital networks, it's a winner-take-all dynamic. So what Bitcoin did is it combined the digital world, right? There's the information is completely, it's able to be copied at almost no cost, right? So we've always had the reason that financial intermediaries, MasterCard, Visa, the banking network, Swift network, the reason that you need third parties is because there's no way to transfer value across the internet without a trusted intermediary, without a centralized third party. What Bitcoin did with basically solving the double spend problem and combining proof of work and the difficulty adjustment is it combined the physical and the digital world. And it did that through proof of work, right? So there's a tangible cost to not only produce a Bitcoin, but when you send a Bitcoin, I can transfer digital value in a bearer
Mm-hmm.
asset type way. And so this is unlike any other network. If you think of proof of stake or any of these other altcoins, right? These are just more or less databases that may or may not exist on a few other computers, but there's no tangible cost here. This is the biggest thing. Bitcoin is not just this. It's an intangible asset, right? So people say, well, it's a speculative bubble. There's nothing backing it. Well, what they misunderstand is that if you want to produce a Bitcoin, you either have to acquire it or expend a whole lot of energy to make one, to produce one. And guess what? That marginal production cost of a Satoshi or a single Bitcoin is going up forever in a programmatic way as hash rate goes up and to the right. And guess what? Hash rate's at all-time highs. So people really, like, if you think of this as a commodity, which it is, right? It's a digital synthetic commodity. It's a monetary commodity on an open neutral network. Well, why is it harder to produce than ever before? And what's that future trend look like? And that's only up and to the right. So yeah, exchange rate's down 80%, but has the story changed? No.
So because it's our first time speaking, I'm just curious, do you have a forecast of where you see the Bitcoin price headed? And I'll give you a timeline, over the next 5 years.
Yeah, up, right? Like there's two things here. There's the BTC USD. Every single asset on the planet is just a fraction, right? It's the numerator and the denominator. The denominator in this case is the USD, right? The numerator is BTC. You have people all over the world that are acquiring this asset, and you have a huge and growing cohort of people that are price agnostic accumulators. So my job, I look at a lot of data. I look at data 10 hours a day. We can see that there's more people than ever that are basically price agnostic accumulators of the asset. 70% of this asset hasn't moved in over a year. 80% of this asset is quantified as long-term holders, and we can go into the specifics of that definition if we want to. We have the most week over week, month over month coins that are leaving exchanges ever, right? So why is that happening? And it's because people realize that they don't want to trust counterparties, and they want to hold this thing, and they want to hold it themselves, right? So price is set at the margin for any asset, right? Obviously, with this global everything bubble in the midst of bursting, the USD part of this fraction, this denominator, is increasing in value, right? So stocks, bonds, real estate, any asset class is falling. Rolex watches, you name it, right? But the BTC aspect of this, across the board, whether you're looking at wallets, HODL metrics, hash rate, whatever, it's all at all-time highs, right? All you've had happen is that the excessive leverage has been wiped, and basically the leverage that was not transparent and it was obfuscated in the crypto space, including fraud, right? FTX was fraudulent. There's no denying that. All of that is just getting eviscerated, right? It's getting wiped. And eventually we get to the point where all of this mark-to-market leverage that can be wiped is wiped. We saw the same thing happen in 2017 during 85% Bitcoin was dead at 3,000. Well, it didn't die, right? Bitcoin dropped 55% in a day in March 12th of 2020. It didn't die. Why didn't it die? Well, the system was fundamentally unchanged. There's just an exchange rate clearing mechanism to the downside. And so that's what we're doing today. Certainly, can the macro pressures intensify? Is Bitcoin going through its first recession as an asset class? Yes, it is. But in 5 years from now, if you're telling me that the fiat system we live in today of stocks, bonds, 401ks, national debt, interest rates, basically entitlements, military spending, and interest expense being way, way above our current tax receipts, if you're telling me that that's not going to be the solution, is only one thing, and that's money printing. That's debt monetization by the Federal Reserve, right? So there's two things. We have this basically solution, or this problem, right? It's that the fiat system requires perpetual credit expansion to persist and exist. That's a fact. It's a fact of this debt-based monetary system. There needs to be perpetual credit expansion or the house of cards collapses. And there's nothing backing the debt itself except debt. There is no gold at the base layer. It's only debt. The other part of my thesis is that now we have an engineering solution. The engineering solution is a neutral, apolitical monetary protocol that's open and anybody can use it. And yeah, once every 4 years, is there a whole lot of leverage and fraud and speculation? Of course. And that's why we're wiping it out. And that's why fundamentally I don't care one bit. Like has my net worth gone down a little bit since the highs? Sure. But it's nothing but a thing, right?
Yeah, I think I'm fascinated by your thesis and your point of view that you feel that fiat currencies will suffer the same fate as FTX, and it definitely merits a longer interview since it's obviously a deeper discussion. But I'm curious to know why you think gold wouldn't be part of that solution. What happens if a gold-backed currency were to emerge as as part of the next monetary reset?
Yeah, so what gold bugs, and I agree with the thesis. I just think that we have just a superior engineering solution. Like you have to ask yourself, why did gold fail? And some will say, and I agree, gold didn't fail, right? It just got co-opted by the state. But why did gold get by the state? Here's a stat for you, right? So there's been two times in the past 100 years or so where stocks and bonds have fallen by 20% in a year, in the same year. Right? There's actually been only a few years where stocks and bonds have both returned negative year over year. And both of these times were double digit 20% plus. It was 1931, 1969, right? 2 years after both of those instances, 1933 and 1971, what happened? The US defaulted upon its debt. What do I mean by that? And people will say, no, the US didn't default. Well, they did. In 1933, FDR confiscated your gold, and 6102, they made you turn your gold in, and then they revalued gold higher instantly. What did that do? From like I think $20 to $35 an ounce. What were they doing there? Well, they revalued the debt burdens lower. They devalued the currency against the bearer asset, right? What did they do in 1971? The French and other countries were saying, "Hey, we want our gold." We were on this post Bretton Woods kind of central bank gold standard where central banks could redeem their U.S. dollars for gold. The dollar is pegged to gold. Well, Nixon and the U.S. government said no, right? Because here's the thing, right? Gold has portability across time. It doesn't have portability across space. Gold is not saleable across space. It can't function in a global economy. I can't have a bar of gold in my back pocket, right? So you need to abstract paper IOUs, digital IOUs, whatever it is. But there's trust inherent in that system, right? So the reason it was co-opted, the reason that the U.S. was defaulted upon this promise twice, is because you need to trust a centralized intermediary. So when someone says, "Well, we could return to a gold-backed standard," I say, "Well, why won't it be co-opted again?" Right? Like what's happening right now with
Yeah.
a bank run on all of these institutions, with a bank run on FTX, with a bank run on Celsius, with a bank run on BlockFi, and all of these institutions collapsing, is an utter evisceration, vaporization of all of this paper Bitcoin. There's a reason that I can audit this entire system
But there's also a
trivially,
reason,
like
and I
very
don't want this
trivial.
to become I don't want to have a gold versus Bitcoin debate with you, but there's also, if you're going to say gold has failed, I think you have to look at it from a preservation of wealth standpoint, right?
Yeah.
And also
No,
bring up
totally.
the fact, well, if gold has failed, why have central banks purchased 400 tons of it just in the third quarter? Records we haven't seen since the 80s if gold is failing. So obviously, central banks, governments are clued in on something here.
Yeah, of course. No, I say gold has failed, not in the sense that gold has failed to preserve your purchasing power. It has done a tremendous job of that. 1 ounce of gold is a fine man's suit. It's been that way for the last 100 years, or longer,
Yes.
right? So it hasn't failed in that sense. And I think that's one of the things where when someone says, "What happens if the U.S. bans Bitcoin?" Well, I'll say there will be people around the planet that will accept this regardless of government mandate. But the reason that gold, when I say failed, I say failed as a medium of exchange, no one is transacting in gold IOUs anymore. Why? The world was on a gold standard, and it wasn't on a gold standard due to any government mandate. And now we are in a world where 7 billion people use free float fiat currencies. So why is that a thing? Even though central banks are accumulating gold, the U.S. has gold in Fort Knox, et cetera. Well, it's because there's that trust inherent in the system where you need to trust a centralized third party to not fractionally reserve your gold. And that trust is obviously the history of money and economics and human incentives says that trust will be broken. And it's the same reason why FTX said their customers had 70,000 Bitcoin and they had zero, right? So the ethos of Bitcoin is don't trust, verify. I don't hold any Bitcoin on exchanges and never do. Why? Because I buy Bitcoin, I send it to my own wallet, and I audit all 21 million Bitcoin every 10 minutes. And I don't need to trust anyone to do that, right? It's trivial. So the future where Bitcoin is a $10 trillion, $100 trillion, that sounds ridiculous, right? A $10 trillion monetary asset. Well, the reality is you have a globally distributed network where you can audit the entire supply in in very trivial fashion from my smartphone, right? And you can't do that with gold. You need trust. So in a digital world, right? I'm 21 years old. I'm very young, and so maybe I have a lot to learn. That's a fair statement. But when I think about where the world's going
Um,
in my lifetime, I don't think we're going to go to a world where I'm saving in a gold backed ETF that JP Morgan has in their vault. I actually prefer a world where I have Bitcoin in a cold storage that I can audit and I can access in 5 minutes if I need to, and it's mine and it's mathematically mine, and I have all
uh,
of my money in my head. Right, that's the future I see.